Welcome back. The Middle East is leading expansion in global container shipping, according to experts gathered at the 4th GPCA Supply Chain Conference. Safety and security in shipping, cost-effectiveness of on-time product delivery, and the growing domestic supply chains in certain markets such as China are among the primary concerns to be addressed amongst delegates. With an enormous amount of product quantities passing through the region, delays experienced at ports and customs for intra-GCC movements of goods were also in focus. With a volume of 120 million tonnes expected to be exported from the region this year, the conference has identified that investments in handling capacity, qualified manpower, as well as new legislation for dedicated truck lanes are key measures to sustain the industry's growth.
Our estimate from a company point of view in Maersk Line is that the situation is only getting worse. The cost will go up. The cost in terms of counter measures to safeguard the ships and the crews is increasing. And that means, of course, that the cost for customers by the end of the day will increase as well.
30 to 35% of the delivered cost goes to the supply chain. Also the timing, the lead time to deliver the products to China, for instance, is 30 days plus. So there's a competition with the local market over there, and this is one of the key challenges for our producer, delivering their products on time and in a cost-effective manner. We're seeing some, good legislation, be it the WTO, which call for, removal of trade barriers. Similarly, in the Gulf region, we're, having legislation for a custom union in the Gulf region, which will come into effect in 2015. All those legislation are going to be of a positive impact on the trade, both within the region and overseas.
Gas is the most important and cleanest form of energy, according to the GCC chapter of the Gas Processors Association. At their 20th annual technical conference, experts say the demand in the region is increasing. Now is a critical time for industry players to enhance individual efficiencies, as well as learn to cooperate between countries to optimise supply. They say the efforts of various governments in the region is promising for the future. Energy experts at the conference also believe governments should look at investing in developing alternative energy sources for a more sustainable future.
Almost every country now in the GCC looking at unconventional gas, which proved success in the US. And now every country is exploring for the shale gas. And I think there I'm expecting, my personal view is that there will be also a revolution in the GCC countries of shale gas. Oman have brought one of the IOCs, and they have already done some exploration, and they have proven that shale gas can be produced in abundance. Saudi Arabia has abundance of shale gas resources and already started testing it. So I think the future for shale gas in the region will be very, very promising.
Other than gas will be the nuclear and coal. These are the most important sources of energy that we need to import. So we need to less import or less concentrate in importing gas, because it's more secure and more abundant. And if happen that we get a chance to have available gas for imports, that will be as a bonus, and that can be diverted to the hungry industries rather than be used for electricity and water.
Arab Tech Holding has reported a net profit of 84.1 million dirhams for Q1, up from 26.6 million for the period last year, while revenues jumped to 1.3 billion dirhams for the quarter, up from 1.2 billion in 2011. And Waha Capital reported a net profit of 15.9 million dirham for the first quarter of this year, up from 29.8 million dirham for the same period in 2011. With that, let's now look at the stock indices across the GCC. Turning our attention to Europe, and Francois Hollande beat French President Nicolas Sarkozy in the race for presidency on Sunday. Hollande's economic plan replaces some of Sarkozy's cost-cutting with higher taxes on the wealthy, but still foresees a balanced budget by 2017, despite a hiring spree in education and a return to retirement at 60. Tell us more about the election results in France, some of the changes Hollande is set to make, and what this means for the Eurozone. We earlier spoke with Dauba-Pantanacce, senior economist at Standard Chartered Bank.
The outcome of the presidential election in France was widely anticipated, even if the socialist frontrunner Hollande ended up winning by a thinner margin than expected. Now, what is important is that the need to reduce France's deficit, which is under threat of further downgrades, will most likely elicit a more pragmatic approach than suggested by pre-election discourses. Also, and despite some campaign rhetoric, it is very unlikely that the Franco-German couple, as a main driver of European initiatives, will be jeopardized by antagonizing position of the newly elected president. It also happens that, coincidentally, or not, actually, the newly elected French president, who had argued for adding a growth theme to the austerity-oriented EU fiscal compact, will surely benefit from a growing rally across many European countries for complementing the austerity measures by stimulus one. And finally, and very importantly, many people forget that it is crucial to note that Hollande's political victory will only be complete if his party also wins over the parliamentary elections in June. Because should there be any surprise at this election that would give a majority to the right, which could happen, then the newly elected president would be basically stripped off of almost any governing power outside a few limited ones.